Good morning, traders. It's the 23rd of June. We are Signal Centre People. I'm Joe, joined by Jamie and Steve. Good morning, gentlemen.
Good morning, Joe.
Good morning,
We're,
Joe.
we're
Morning,
here at
Steve.
last.
We're here at last. A little run-in with the TradingView police, but yeah, we're here.
Yeah,
They're
yeah.
only doing their
On it,
job.
it's an honest mistake, Gov. Hands up.
Yeah,
Yeah,
and
so bad.
Because I
I
don't
think
think actually that link you sent would actually show anything anyway, would it?
no,
'Cause
but
no.
yeah,
Okay.
got a nice slap on the wrist to start the day, but it was
Yeah.
deserved. So let's move
Yeah.
on, shall we? Okay, so we're going to get stuck into the latest headlines first of all, just to give you a flavour of what's happening, what's moving markets for today and from yesterday. So let's bring those up. First of all, we had Powell notes slowing demand. He yesterday, in his testimony to Congress, stated that the central bank is strongly committed to bringing inflation down, and he anticipates ongoing rate increases will be appropriate. So no real change there from what we already knew. He added that inflation had clearly surprised to the upside, and further surprises could be in store, with the Fed needing to be nimble. He reiterated that the pace of future interest rate increases will depend on incoming data and the evolving economic outlook. When asked whether a 100 basis point hike was possible, he stated that nothing was off the table, but that it was unlikely. So pushing that on to the July rate decision, that is still very much open. The Philadelphia Fed President Harker stated that we need to get interest rates to 2.5% quickly, and that rates should be above 3% by the end of the year. He did, however, add that the bank was starting to see a softening sign of demand, and that there was a further and if there was a further slowdown, it may be possible to limit the July rate increase to 50 basis points. In terms of what's happening with currencies, we saw the yen recover slightly from 24-year lows yesterday. The former Japanese official Nakao, who was in charge of ordering currency intervention, stated that the current yen weakness is detrimental to Japan's economy, which triggered fresh speculation over intervention to curb yen losses. The Japanese yen and the US dollar, or the dollar yen, sorry, is trading around 135. They talked about intervention at around 130, so it's far surpassed that. Some intervention at some stage could definitely occur. In terms of the SNB, Swiss National Bank, they've stated that inflation is broader than just energy prices, and that inflation data shows the need to tighten monetary policy further, although it was unclear when. As we know, the Swiss National Bank like to throw a few surprises out there, so we'll wait and see what they do. More records being set on the inflation front. Canada hit a 39-year high yesterday. The headline inflation number increased sharply to 7.7% for May from 6.8% previously, which was also above the expectations of 7.4%. And then we saw Norges Bank expected to raise rates. They have a June policy meeting and expect to raise rates by 25 basis points, taking rates to 1% overall. But there is also some speculation that the bank will decide on a faster pace of hikes given the inflationary pressures and global tightening. So that's that for the latest news. We've called the show Fickle Thursday today, and it feels a little bit fickle in the markets in a minute. They feel a bit, well, scared, I would say.
Oh, don't be scared, Joe. We'll help you.
No, I don't feel scared. I think the markets look scared.
Oh, right. I see where you're coming from now.
Tried
I'm
to
with you.
rally, but it just didn't work out, did it?
No, it didn't.
Yeah,
It
sort
didn't
of.
at all.
So, Steve, what are you going to kick us off with today? Are you going in with cryptocurrencies, or are we going to start with commods?
I don't know. I am tempted to start with commods.
Go on.
Let's start with gold, shall we? Because gold is my favourite colour, favourite sort of like jewellery to wear and things like that. You see me often walking down the streets of Whitton with gold chains and wrapping. So let's take a look at this weekly chart. Let's have a little reminder of what the weekly chart's showing us. It's very much since April 2020, after the pandemic hit. We started to get a gold rally. It settled down up until June, and then we had the big spike up to the all-time highs. Since then, we sold off to just below the $1,700 mark, and then we had another attempt at the all-time highs and failed. Big shooting star candle, showed failure on the week of 7th of March. And since then, we've been in a downward correction. I still feel we've got further downside to go. Last week's candle was a bearish outside candle. That's negative for gold price action. And we can see on a daily chart, the same sort of levels that we talked about on the weekly chart and this downward correcting channel. Now we're trading around about the 61.8% fib. We've posted a couple of, well, we posted the higher low from our dip down on the 16th of May. And so that looks a little bit more promising, but we're still hanging below the 21-day moving average. So overall, still tentatively negative on the daily chart. The 4-hour chart has shown a decent attempt at a correction, but now being capped by the Ichimoku cloud. So the trend's still down. You can see the sort of shape I'm moving to on the hourly chart. It's a triangle. And this, you can actually take it right back to here if we want to. This is, I quite like this one. So that for me has got 3 points on that side. It's got 3 points on this side. It's definitely sort of like a break in either direction is obviously possible, but for me, the overall trend is still lower. So there's more expectation for me for a break downward. We have got this potential upward trending support line on the 1-hour chart. Support for that comes in at 1810. That's been my target for my gun to head trade idea, which you'll see how that got on yesterday. That's been my target for that over the last couple of days. We did have a bit of a spike up yesterday. Where did we get up to? I think it was about 1848. Yeah, 1848 was the high. And on the hourly chart, we formed an evening doji star on that hourly chart. And then we saw prices move lower, been down to around about 1830. A little bit of a pip up now. Again, it's yesterday felt like a little bit of a lull in the proceedings. The indices had a little bit of a rally. Dollar sold off a little bit. That sort of gave a little bit of a positive spin to gold. We can see the spike higher, but things have settled down again. I think we're ready to resume the downward trend in gold. Oil is under pressure. A lot of the energy sector under pressure. On the weekly chart, a reminder in oil, we've posted an evening doji star formation, potential for an ABC correction. That would be targeting the move to around about $87. We've had, this is a third week of negative price action, and this potential or this trend line, upward trending support line, we are breaking below it on the weekly chart. So that's a negative story for oil, which isn't a bad thing for us. We're sort of like, everyone's running around struggling to pay their heating bills. So if oil can come off, that might help a little bit. We can see there was a reverse trend line as well that price action has broken below. So as long as we stay below this this level, around about the $106, $107 level, then further downside is expected. $100 should provide a little bit of psychological support. We've got a few points here which were higher lows before, should act as a support also, maybe slow that move down. Let's take a little look at cryptocurrencies. Don't forget cryptocurrencies, still struggling around about support. I'm struggling to actually hit the crypto. There we go. 20,500. Seems like we've been here all week. And as you can see from the weekly doji candle, we have been sitting here for a while. We've opened and we're currently closing at that. Obviously, the weekly candles on Bitcoin carry on till Sunday, and but we are sitting around this supportive level, which was really significant. We had this level of support at 28,800 or 28,500, and that we expected a vacuum, a very fast move once that support was properly broken. It was properly broken the week of the 6th of June, and prices closed below there. And the following week, we saw that vacuum trade. This is because previously there was not a lot. This rally was very rapid on the way up. This is going back to December, January 2020. The rally was really rapid, so that meant not a lot of trade took place there, not a lot of volume. So that would leave a vacuum for us to fill, and potential for further downside, I think, in Bitcoin as well. Nothing really indicating for me that this is going to recover. Any recovery should be capped around about the 28,700 to 32,500. So for me, that's the sort of like the real line in the sand that Bitcoin prices need to recover above before I ever get excited about Bitcoin again. Not that I ever was excited. It was obviously a great to see markets explode upwards, but I like to sort of like really understand the reasoning behind it. And this was just seems to me like this is just getting carried away with all the rhetoric, and most people who are investing in this don't really understand it. That's about it, really. Further downside expected on this, a break below the 20,000 support area. I'll call it an area because it's not an exact level. It's very difficult to give an exact level on this. We've seen prices spike down to around about 17,500. We're trading at 20,500, so 3,000 points from the multi-year low. A break of there should again open up a drive down towards the 14,000 level, then down to 10 and possibly 8. Yeah, I can't really see my view on this changing anytime soon. And that's me.
There's a mic drop there, Steve. I think you just yeah, we've lost all our viewers on the back of that comment as well. But
no, they'll come back. They'll come back as soon as Bitcoin bounces. They'll come back and say, "Ha, you were wrong."
Yeah, I bet they can't wait.
Yeah, I bet they can't.
Okay, lovely. Thank you very much. So let's get on to FX then, starting off as usual with the dollar index. So this kind of typifies the idea of Thursday being fickle, or certainly Wednesday anyway. Not really a lot going on overall, to be honest, still very much trending higher. We did see a bit of a red candle form yesterday. It was looking quite bad at one stage, but I guess following on from Powell's comments, we saw a bit of recovery in the dollar and more money moving back in to the dollar in the form of a safe haven. Very much on the front foot today. Things looking pretty robust as it stands, up by 0.42% right now. So still looking for higher prices overall. Can't rule out any sort of correction really in the short term because it has had such a phenomenal run higher. But in order for that to happen, we are going to need to see a bit more risk appetite in the market, and people start buying up some riskier assets like stocks and potentially cryptocurrencies as well. So for now, it still looks like there is some fragility out there. In terms of other currencies, looking at Euro US dollar, obviously flip side of what we've just looked at on the dollar index, we saw a little bit of good price action yesterday, but failed to really break above these previous swing highs, and now we're posting more red on the chart, engulfing all of yesterday's gains actually as it stands. And overall looks like we are set for lower prices. These are the key levels down here to watch. So we're in at sort of 103.50, 103.60. In that kind of range, we expect prices to maybe find some buying interest. But obviously, if that breaks down, then we will be expecting much lower prices. In terms of what we need to see for this to actually reverse, we probably need to see a break above these highs up here, which is also a 38.2% fib level at 107.86. That would then, for me, complete a nice looking double bottom pattern, and we can potentially see higher prices over the medium term. Looking at cable, just again focusing on the sort of most popular FX pairs, this continues to trade lower. We're rolling over again to the downside. We've still got this 78.6% fib level doing a pretty good job as support, but looks as though we may be heading lower to retest that again in the very short term. There was one currency pair which was looking pretty interesting to me, and that was Euro Oz. So I've got a head and shoulders, an inverse head and shoulders drawn on here. Based on today's price action, it looks as though we're breaking out from the neckline there in order to complete that pattern. However, we are running straight into a resistance level at 153.54. But this is potentially a nice emerging pattern that people may want to keep an eye on. Obviously, when reverse head and shoulders form, they tend to be pretty powerful reversal patterns, and that could lead to higher prices over the short to medium term. If we take a look finally at dollar yen, as we talked about in the show notes at the start, yen very weak overall. Still, this is trading at elevated levels, highest levels that we've seen in a very, very long time. There is rumours of intervention, so do be aware of that. If that does occur, then we could see a pretty dramatic shift in this and a substantial increase in volatility. But overall, for now, still looks very bullish and no real signs of it slowing from a technical perspective. But obviously, if there is intervention, then that could all change. Okay, let's move on to indices. And going to start off with Aussie. Let's take a look at that. That's still holding this 38.2% fib level. So heavily linked to commodity prices, as we've discussed previously. So if we see any correction in the likes of oil or base metal prices, then this is likely to impact Aussie, the Aussie index, which is why we've seen this correction take place over the last few sessions. Seems to have found support for now. Have to wait and see if it's got any legs and whether or not the buyers are really up for driving this higher in the short term. Taking a look at the DAX, that's down by 0.65% as things stand at the minute. It broke through this support level here that we had on the chart at 13,277. We've then seen a decent retest of that and the sellers have stepped back in, but we're trapped in the very short term in a bit of a range here between 13,277 down to this 78.6 level at 12,963. So more range bound price probably expected in the very short term. But if we break down below this 78.6, then we'll be targeting these swing lows from March earlier this year. Onto the FTSE, a similar sort of situation to the DAX, really, trapped between some key levels. So on the upside, we've got 71.56. So we saw a breakdown from this level here, highlighted by this big red candle. We've then seen a retest, which has failed, and we are seeing prices move lower. FTSE not performing as badly as the DAX as things stand at the minute, but we've got some support down here to consider the 78.6% fib level at 69.58. So in the very short term, expecting prices to continue gyrating between this kind of zone. If we get a break below the 78.6, then we'll be looking again for a retest of these lows that we posted in March. Onto the US market. So still waiting for this gap to be filled on NASDAQ. This was created on the 13th of June. And we've seen a couple of attempts at trying to push higher, but each time we do, the sellers seem to be stepping in to take this lower. Yesterday, we posted a doji candle, which again just highlights the indecision that's in the market at the moment. I'd like to see this gap filled, and then I think that may potentially trigger the next wave of selling down to this 61.8% fib level as our next target, which is 10,500. Obviously, the longer this sort of sideways price action goes on, there is potential for a bottom to form. Overall, the trend remains bearish, so I'd prefer to side with that for now. But potentially, we are seeing some sort of rounding formation take shape here. So nothing can be ruled out at the moment, I don't think. But again, preference is for more downside. S&P 500, that's rallied into the underside of this 38.2% fib level and also this swing low here from the 20th of May, which seems to be doing a pretty good job as resistance and preventing prices from moving higher. Yesterday, again, we had a doji candle here, ultimately still looking for lower prices on the S&P 500. I think when you do see bottoms or when you see risk rallies or bear market rallies take shape, they tend to be a bit more aggressive than this. So I wouldn't rule out a big move to the upside at some point. But each of these rallies that we're seeing in the short term seem to be fizzling out quite quickly. So suggests that there is still more pressure on the downside. I'll leave it there because not much difference to talk about on the Dow between the S&P. So I'll hand it over to Jamie and you can talk us through some stocks.
Cool, thank you, Joe. Yeah, I'd reiterate that there seems to be a bit of a rally, but nothing too convincing at the moment, as I will show you all. But starting off, we'll jump in with our favourite box store, my favourite box store, I should say, up 35%. I mean, when you're down so low, it can you only need to move like $1 or 50 cents to to have a 35% move. And actually, in the pre-market today, it's up to 255. So that's another 20% up or 25%. So yeah, I guess, I don't know, nothing really to say about that. Revlon as well, up another 34%. This gapped up doji style candle, a very weird looking chart, honestly, this sell off and then this huge rally. It's not your typical kind of thing. But our our biggest gainer for today, we'll check out OBCI, and this is another one of those where it's just like in space, because this one's up 117%. It was in this pretty nasty looking downtrend before yesterday's move, and let's check out the volume. It's always the same case. I think we're going to have fun here. Oh no, this isn't pharmaceutical. Let's actually have a look. I might be able to pronounce some of the words. Let's see what we can find. So this is OBCI. Here we go. 1-1 Water Marine rose 4.9% after the recreational boats retailer announced plans to acquire OBCI, Ocean Biochem. And that's what's sparked this huge move up over 100%. So a nice one to be involved in if you were. On the flip side of that, we've got Regencell Bioscience Holdings Limited, RGC, down 21, almost 22%. Pretty sizable move down. Nothing really to see in the news as far as trading view goes, but a pretty heavy move down. And again, the volume it's not huge volume, so perhaps not. We'll see where that one ends up. But when the volume isn't as high, that worries me less usually. But regardless, a pretty bad day. Jumping into a heat map for yesterday, and you can see it was a bit of a nothing day generally. Certainly most of the big stocks barely moved. I think it was a bit up and then a bit down and then ended kind of somewhere in the middle, didn't it? The only thing really notable here for me, it looks like health technology did very well. But the main down one is when we checked out oil with Steve, energy and materials. So we've got a pretty bad day all round for this sector, and we will jump in and check that out. We'll start with that actually. If I scroll down, I've picked a couple of these stocks that we could have a look at. So ExxonMobil Corporation. We had this pretty decent sell-off on this back into what was a resistance level around here. We ended up breaking through it with this high volume, really bearish looking day. We gapped back up and closed quite high, and then yesterday we gapped back down and closed towards the low of the day. If we look at this on the intraday chart, we'll zoom into 1 hour, you can see actually at the start of the day it tried to be bought back up and it sold off towards the end, which is a bit of a worry for me. I mean, if you're a bull on this stock, I mean, I'd like cost of energy and oil and all that to come down. So, but yeah, I think this could rally a bit more before a bit of a move down. It's had such a huge move up since October. I mean, it was only in October time we were trading at $28 and now we're at 87. So it's been a pretty big move, but it seems to be perhaps starting to stall now. When we look at that weekly chart, this is a pretty negative looking formation here, with last week's candle being very bearish. So we will see how that develops. Keep a close eye on it. A couple of the other ones in the sector, this is CVX. Again, really had an extended move and the sell-off starting to happen, and the same with ConocoPhillips. So yeah, energy sector was struggling yesterday. If we dive into a couple more stocks, what do I want to look at? CMC, so what's this? This is Commercial Metals Company. Had this area of support here that was doing quite a nice job. It's about 35, 50, 36, like in between that area. Had this really bearish candle on earnings day. We did rally back above it. We gapped lower yesterday. This ended up being down 6.21%. So I think this has got, again, a lot of room to move lower once you've broken through that support level. We could have a bit of a retest. It would now be resistance, so we can change that. But I'd still say this has got room to move slightly lower. There's quite a few support levels, so there will be buyers waiting down here. But yeah, certainly some room to move lower. Check out Coinbase as well. This is jumping all over the place. Percentage-wise, it seems to be up 10% one day, down 10% the next. And I guess that goes hand in hand with the volatility we're seeing in cryptocurrency. But we're still in between the key levels that I had drawn out. We gapped lower yesterday. You can see the previous day we closed at about 57. Yesterday we opened at 53 and ended up closing at the low of the day towards 51.91. So a pretty bearish day actually, with the volume starting to pick up too. In the pre-market we are back up to 52.86, which isn't actually that high, honestly. It looks bigger because they're stacked on top of each other here, but yeah, it's still not looking too great on crypto. We'll see if this 45 level can hold. I think it's probably going to be broken sooner rather than later, but we'll have to wait and see. Meta platform still struggling. There's not too much more to add there. We looked at that yesterday. Neo though is still pushing higher. It didn't move too much higher yesterday, but it did hold onto most of the gains from the day before. It did close a little bit lower, but opening today at 23.32, so it looks like it's going to be opening closer to this resistance level, which we have marked up here. And this is starting to see, this to me is a bit more of the turnaround you want to see. If we draw some, let's see if we can get Fibonacci. Have we been playing around with some Fibonacci levels? Let's have a look. So we, on a weekly chart, we've just about held on to this 78.6 fib. I mean, we did close through it and we got this doji on the weekly chart. But we rallied up, and since then it's been pretty strong stuff. I think a weekly close above this red line I've got here would be a real indication that the move higher is potentially happening. But this is a nice little short to medium term bottoming pattern. So we'll see how that develops, but things are looking a lot better for Neo. Dive into Nike. The only thing I want to say about Nike is we're at this support level we have here of about 104, 105. I'd expect some buying support perhaps to come in, and if that were the case, this could be the early stages of a continuation head and shoulders, which, as we always say, is not the traditional sense, but it shows that the buyers are struggling to regain control of this. So yeah, and this had Nike's had a really nice move. It looks like there could be a bit of scope to move a bit lower from here. We'll finish on Pfizer. The reason I want to look at this is that the support level which we have marked on the chart here seemed to have done a pretty good job actually. We closed right at it on the 17th, so that was on Friday, wasn't it? With pretty high volume, but over the weekend we gapped up, and 2 days back to back of bullish candles. So we've got a few gaps here on the downside. Maybe we'll look to fill a couple of these before we get a bit more of an indication on where we're going. I think for me, it's got to be a break of one of these two levels. It's got to be a break of the green support at about 46.52, or a break above the kind of 55 level we've got here. Until then, I think it's just going to be chopping between these levels, and we won't have too much direction. So they're the key levels to look out for on Pfizer. But overall, a bit of a nothing day in the markets yesterday. There wasn't a lot of huge moves other than the energy sector. So we will leave it there for now.
Lovely, thank you, Jamie. Okay, let's move on to the gun to the head challenge. So each trading day, 3 of us come up with trade ideas, and we see how they go between now and 9 o'clock this evening UK time. We must all pick trade ideas with stops and targets. The risk reward on those ideas must be better than 2 to 1. If anybody wants to check them out, then please feel free to do so, because they are all published live onto our TradingView profile. Not much to write home about yesterday, unfortunately. I think we had 3 trades. Jamie went short of Euro CAD, which was stopped. I went short of sterling New Zealand dollar, which was also stopped. And Steve, to complete the set, went short of Aussie, which was also stopped. So
we're a contrarian indicator.
Didn't have a great day yesterday, but overall, since we've started doing this, which spans a hell of a long time now, we have done pretty well. And the idea of this isn't to really show that we can make fortunes from it, because at the end of the day we are coming up with these trade ideas on effectively the spur of the moment, but the idea is that we're just showing or talking about risk management and how to set trades up. So since we started with a hypothetical balance of £1,000, we've more than doubled our money in that time frame. Win rates typically around sort of 42%, which isn't dreadful, and having that 2 to 1 risk reward ratio really is the key to all of this. So that's my spiel. Who's going to show the audience a winning trade today?
Oh, I don't know about that, but I'll go first if you want.
Go on then.
I'm going to go back to the old faithful gold. I still believe we're moving lower overall, and this sort of like attempted rally yesterday stalled, produced a lower high, and we're stalling on the hourly chart now. So I'm let me just line this up, make sure it goes to 9 o'clock tonight. That's when it will expire. So I'm selling gold at 135. Oh, let's call it 136. 136. Target 1812. Stop at 1845. That gives us a 2.67 risk reward ratio. The stop is just above the downward trending, potential downward trending line here. That's it. That's me. I'll publish it now.
Jamie, you got anything?
Nice. Yeah, I'm happy to go. Here we go. Let me get this on the screen. So I'm just starting to write this up now. But I'm looking at the US dollar against Turkish. It's lira, isn't it? Turkish lira. I mean, certainly from a weekly chart, it's like, okay, it's only been going one way since pretty much the dawn of time. But looking at an hourly chart, and this is only an intraday idea, so I don't really care about the weekly chart and what the longer term picture is. But what I'm seeing here, it's just really, really choppy, and we're at the top of this choppiness. So for me, I don't want to overthink it too much. We're at resistance. There's a clearly defined support at the bottom. I'm just going to sell at resistance and, hope we have a repeat of what's been happening for the last few days. So nothing too glamorous. So we're going to look to sell the US dollar against the Turkish lira at current prices, which are, which one is it? There we go. It's 17.36.23. I mean, it's kind of oscillating, but we'll go with that. 23. We will look to take our profit right at the low by the support, which is 17.3012, and our stop will be at 17.3778. And this gives us a 3.94 risk reward. So the risk reward is great. And these are the kind of trades we look for, ones that we can keep a nice tight stop just above the resistance, or and target over 2R. In this case, we're getting nearly 4. So it kind of makes sense to me why I would take this. So we'll go with that today.
Nicely done. Okay, I'm going to take a look at Euro Yen. Just flicking through some charts. This is an hourly chart, so let's take a look at the daily just so that we can put this into a bit of context. It is pretty rampant. We've talked about obviously the yen weakness, but we also mentioned today in the highlights that there could be some intervention at some point from the Japanese central bank, and if that were to occur, then obviously they'll be taking measures to try and strengthen their currency. So off the back of that, it seems as though we have stalled into a fairly significant resistance level on the daily. But if we zoom into the intraday charts, on the hourly chart, what I've also highlighted here is a short-term double top. So we've broken down through the neckline of that double top pattern with this large candle over the last hour. A little bit of a retest of the neckline there. So decent opportunity, I think, to maybe sell this and look for some short-term gains. So I'm going to sell Euro Yen at 142.42. I'm going to place a fairly tight stop loss just above the neckline of that double top pattern that I've highlighted at 142.97, and I'm going to target a move down to the 161.8% extension of this move to the downside, which comes in at 140.50 to give me 3.4 R on Euro Yen today. So that's my day trade setup, and like the other guys, I'll be getting it published onto the TradingView profile imminently. So 3 trade ideas there, guys, for you to check out, and best of luck if you're following them. In terms of data today, obviously there's a few bits on the calendar that you need to be aware of, and these all could create volatility. So we've had the German PMI index out already. That was out about an hour ago. We've just had the UK PMI index number out. That was out at 9:30 UK time. Later today at 1:30 UK time, we've got the US jobless claims. Then to complete the hat trick of PMI numbers, we've got the US latest figure out at 2:45 UK time, and then following that up pretty quickly, we've got the Fed Chair Powell testimony. Again, we'll be talking no doubt about monetary policy and the potential for interest rate rises, so that'll be a well-watched conference later today and could of course create some volatility in the market. So do be aware if you're trading today anything linked to US currencies or indices. Okay, gents, anything else?
No, all good.
No, all good from me.
Excellent. Okay, well, I hope everybody has a great trading day, and we'll be back to wrap up the week tomorrow.
Excellent. Cheers.
Have a good one, guys. Goodbye.